Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors.
Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to get into our views on Japan. We've been constructive on Japan for a while now, really around the idea of reforms in corporate governance, increase in capital expenditures, and basically just more broadly improving growth. So we've been, where it makes sense, we have certain guidance that we publish where we're overweight certain asset classes or areas, regions in this case, and we happen to be modestly overweight Japan. There have been a couple things that have happened recently that are sort of reinforcing the idea here in terms of what's been going on. Now, of course, like any market, Japan will be subject to volatility. There's a lot around the strengthening or weakening of the currency that has an influence for U.S. investors. But anyway, we want to kind of just get into some of the things that have been going on and then what this means in terms of our outlook for the market there, basically. So jumping in, I guess the first is to say that we saw an election where there was a real decisive win. And this was Prime Minister Takaichi. And basically, it was a decisive win. So to get into the numbers, essentially 2/3 of the lower house, and again, just kind of working through the numbers. So 2/3 of the 465-seat lower house, and this was on February 8th. And this basically, think of it as the size of that win sort of signals the support, right? So this is what they're calling the biggest election mandate of any Japanese leader since World War II. And so since the election, the yen strengthened a bit. Stocks there have outperformed the U.S. and Europe over that brief time anyway. And so that's a major shift. And basically what that's going to include is fiscal spending. So there's basically her platform includes essentially spending more money. And in fact, just recently there was announced a U.S. Japan bilateral investment agreement reflecting sort of greater strategic alignment. Obviously, that reduces sort of the tariff trade friction that's been there, but it's over $500 billion, so $550 billion. And so essentially where that's headed is think of initial projects. So there's, for example, a $33 billion investment in a natural gas power plant in Ohio, and that would be the largest in the U.S., and then a crude oil export facility in Texas, and then a critical minings facility in Georgia. So it's basically U.S.-based investments where there's collaboration between Japan and the U.S., and investment from them into our country. And, that has an effect, among other things, of just reducing worries about trade friction and, kind of getting to a deal, getting past it, moving on. And so that we view net as a positive. So in the case of Takaichi, essentially a commitment to a sustainable fiscal policy and plans to fundamentally overhaul the government budget over the next couple of years. Anyway, think of it as a view that's been positive on that, and markets and investors are reacting positively to that. In any event, the other thing that's happened is more on the monetary policy side, where the Bank of Japan has brought interest rates up, and their policy rate now sits at 0.75%, which is still pretty low by global standards. But essentially, they're tolerating a little bit more inflation. And so think of it as, therefore, companies onshore, this is likely to be a positive for companies sort of selling into the Japan market. So you take, for example, financials, that segment, it basically has surged year to date. So the Topix Banks Index, for example, is up over 20%. And against this backdrop of rising rates, which often is sort of coupled with a weakening equity market, since they started increasing their rate back in mid-2024, the overall broader index has returned over around 90%. So it's just been a positive environment when it comes to monetary policy. Again, kind of coming into sort of a form that's more consistent with what we see around the world. In any event, the other thing that I'll mention is the idea of sort of corporate reform. So, for example, in 2023, this goes back a ways, the Tokyo Stock Exchange sort of pressured companies trading below 1x price to book value to improve capital efficiency, try to raise and increase their return on equity, and outline credible plans to enhance shareholder value. So just think of it as, in this case, the exchange kind of driving companies to do a better job for shareholders. And then I'd say another signal that we're seeing is the idea of companies across various industries buying back stock and increasing dividends. So this idea of basically returning money to shareholders in different forms. And, I think going with that is sort of divesting non-core assets. So companies focusing more on profitability, more on their standard businesses, et cetera. And all of this has sort of just been a positive environment for investors. And so anyway, we think market leadership there then will maybe shift a little bit towards domestic facing companies. And, if we look for the cracks, we always try to look for the risks. One thing that we're mindful of, therefore, is that companies that sell global, right, that are more offshore focused, can face some headwinds. And in fact, an example of that would be Japanese automakers, where they're seeing sales weaker than expected and basically profit declines as a result. And so the offshore example would be selling to non-Japanese would be automakers. The onshore, in terms of strength, would be financial stocks there locally. So anyway, sort of a quick pulse kind of session today. Just wanted to share those perspectives. And again, the net is we remain modestly overweight Japan, where we do those kinds of dynamic leanings. And from time to time, we'll just share these kinds of investment-related insights in that regard. So thanks so much for listening to this episode, and we'll catch you on the next one.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.